right, S&P 500 finished the fourth day in a row to the upside, a third day in a row with all-time highs. So really good run. But there's some cracks that are starting to develop underneath the surface. I'm going to break that down in today's preview video, market outlook preview video. We'll take a look at a divergence that's showing up right now between the cap weighted and equal weighted indexes. We take a look at divergence and volatility. We also take a look at the most important sector in its move and what's dominating the market. And we break all that down in today's market outlook preview. So let's go ahead and get started. Today is Tuesday, October 28th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. Before we get going too far, if you click this link right here, that will take you to our market outlook page on our site. This is what it looks like, the full blog post. Our free subscribers get access to this blog post every day. It includes all the information on what happened today, why it matters. Again, if you click that link, it will actually take you to, the page will actually look like this. If you're already subscribed, just click on login here at the bottom. If not, click this blue button. It takes you to this page. You can also click this link. It also takes you to this page here, and you can subscribe to our site for free. And again, like I said, for free, you get the full blog post every day, including this video, the market outlook video, preview video that you see here. And if you're subscribed to our foundation tier, then on this same page, you'll actually get access to the full market outlook video. All right, so the S&P 500 finished the day with a new all-time high, as mentioned, and new intraday high, new closing high. Same thing for the past 4 days. We've had 4 days higher, 3 of the past 4 days at least, with all-time highs. Pretty darn close on this one here. This might have been, well, not even an intraday high, but at least it was higher. But to have 4 days in a row and for the breadth to be as poor as it is, that was kind of the main theme of today. When you look at the breadth, like for example, if I look at, well, let's take a look really quick on this chart. So that's the S&P 500. That's the market cap weighted index. If you look at the equal weighted index, you notice we actually were down today, almost a full percentage point. And you can see the near-term line down below the intermediate line. The intermediate line is still above market sentiment, but an extreme low on the momentum line. So that was a pretty bearish day. And then when you look at the ratio chart of the S&P versus the RSP, we kind of went parabolic there. We jumped up above 70, which is, again, is not very common. We've done it a few times before. We did it over here. We did it in June, earlier this year in June, and we did it last December. And you can see just on the trend that it's been on, the S&P has been outperforming the equal weighted index for a long time here, pretty much since we come off this April 8th low, because it is 86% correlated with the S&P 500. So it's been pretty bullish here. In fact, if I zoom out for some context on this, you can see just how bullish we are. Now, we're not as bullish as we were in 2024 in July, when we really went parabolic on the S&P relative to RSP, and we're not as bullish as we were in 2023, coming off of that significant low point, right? The correction low that we had in 2022. But again, very strong move, very high RSI right now. The CCI is up to very high levels above 250. The positive indicator has been high for a while now. So a very strong move. And then when you look at the number of stocks above their 50-day moving average, right? We've been trending lower. As we've been moving higher, this has been trending lower. And we had a couple of days here of pretty decent breadth, but a big drop in this, down below 239, below the 250 mark again, which is the 50% mark, below the average, and the average is fine. I mean, this is a tremendous divergence here that we're seeing on the much lower highs on the number of stocks above the 50-day moving average with the index, and that usually doesn't end very well, a divergence like that. The other significant divergence occurred with volatility. Volatility has been down lately, but it was up today, and the VVIX was also up today. So you can see, as the VIX has dropped during this past week or so, The VVIX dropped too, but did not get to its previous lows, and then bounced up a lot more today than what the VIX itself did. You can kind of tell here. And so, again, that most likely will start to lead to a weakening in this correlation, like we've seen before. And then every time we've had some of this, there's been even just a little jump in volatility, like we saw right here, or a bigger one, like we saw with this jump up above into the mid 20s, low to mid 20s. So that's a little bit of diversion. The VIX is still fine. Like the VIX was only up a little bit. It's still below its 200-day moving average. It's still below its 8-day moving average, for that matter. Like it's fine. It's not jumping up as much, but the VVIX remains at a level that we don't want it to be above 100. And so that's a little bit of a warning sign. Usually this tends to move up faster than the VIX does. And like I said, we're coming up off of a higher low right now on the VVIX, with an obviously equal to slightly actually lower low on the VIX itself. The couple of big sector moves that we saw is XLK. XLK continues to dominate. You can see how well it did here. We'll just put SPX back on here. You can see how well it did here, how well it's been doing for the past 3 months, but especially today. If I just look at today, technology had a big move higher. Energy, as well as all the safety trades, having a big move lower. So interestingly enough, again, when you look at this ratio chart, we'll look at the ratio of XLK to XLE. This is a ratio that is also strongly correlated with the markets. It's gone parabolic, right? That's a very strong move here. You can see the long-term PPO is very high, above 200 on the CCI, above almost a 45 on the positive indicator on the DMI. Like that's a strong move for something that is strongly positively correlated for the markets. We're well up above the 200-day moving average. If I change this PPO down here to just how far above the 200-day moving average we are, you can see we are well above that, the highest that we've been above it for a while. If I zoom out to give you some context, you can see here, see it's right here. It's among the highest. We got there in 2024, early 2024. We also got there in 2023. And you can see about these levels is where we ended up dropping and making a run back down to the 200-day moving average, which as long as the correlation drops along with it, then we're fine. That means the S&P is going up while this falters. But again, you can see this is typically more positively correlated. So a drop to the 200-day moving average, as we saw earlier this year, can be associated with weakness in the market. And that, again, that's something that's parabolic. You never know when a parabolic peak will finish, right? So it hasn't finished yet. We're still way above the 8 days. So there hasn't been any signs that, but that you can get the idea that there's some cracks underneath the surface with today's move, as bullish as it was, with the Fed about to cut rates tomorrow and earnings coming out later this week, and Trump's trade deal by the end of the week. A lot of potentially the end of the government shutdown at some point in time. A lot of good things on the radar that the market seems to be pricing in a hurry over the short term here recently. So in our full market outlook video, I go into a lot more detail. You can click this link here, subscribe to our site at our foundation tier, which is just $29 a month. You get access to all of our full daily market outlook videos, including the trades we do. We always do one trade at the end of each video that's kind of representative of what we talked about during the video. You get access to the Market Outlook Live. It's a live stream we do at 3:30 Eastern time on our site, where we put on the trades in real time before the market closes. We also manage the old Market Outlook trades to see whether we should stay in them or get out of them, which is probably a lot more important to you than just the trade idea itself. You also get access to our trade tracker, where we track the results of all of our trades over the course of time. So all of that, again, for just $29 a month with that link that I shared with you before. Thank you very much for watching. Subscribe to our site. Subscribe to this YouTube channel over here. You can also click that link, that icon over there. Click the thumbs up icon to like our video. Comment on anything that stood out to you. Share the video with anyone else. Follow me again on Twitter at DavidSettle42 for more content between the videos. Have a great rest of your Tuesday night, and we'll see you all tomorrow.